hour. Welcome to 587 edition of Invest Data Trading Academy Live with Ambrose. Yes, I'll tell you that the global markets are in red, and as a result of what the reaction toward to continuous strike in Iraq, and this geopolitical tension has pushed, push up what we call risk, and that have also triggered severe even investment. And you can see that the price of crude oil and gold is on the rise as a result of what the reaction to this strike. And tell you that is how global market is at this hour. But let's tell you down to what is happening in Asia right now. I will tell you that Asia market is sharply in red as we speak now after US and Israel attack Iran over the weekend, pushing up oil price as I mentioned, and also widening out the rush out for risk investment toward into safe haven. And that is why we have seen as mentioned earlier. I will tell you that most markets in that region, as to speak, are looking very weak, leading from what or kind of an indication or a follow-up of Friday, Wall Street performance and uncertainties over artificial intelligence or tech companies and interest rate dented the US stock. And that was seen also that the zone or the Asia stocks or market or in that zone also are looking are sliding further to the south as we see the drum up for more risk advert. As I speak now, Hong Kong and Nikkei 225 were among the worst performing stocks market. Now in Asia, they are already sliding by 2.4 and 1.6 respectively in that market. And these two were pressured by losses in tech stocks or tech companies. And as to speak, like I mentioned, South Korea also was seen that market also right now are also in red. And Australia is not left behind. Singapore is also not left behind. And India market is not left behind. I can see all these markets are looking southward as reaction. And this is a cross or a broaden after the US and Israel attack on Iraq over the weekend, killing hundreds, and also these are also including the Supreme Court order about on the top officials in that. This also Iran represented by launching strike also across several Middle East countries and US based in the region. This conflict shows that few signs of easing, with US and Israel leaders signaling they will continue to attack Iran. Also, while that also bitter retaliation also from Iraq would focus also on the country leadership change from Iran. These are the things that also affecting that region as we speak now. I'll tell you that the tech losses is part of what is weighing on the market in China, and also China economic policy also in focus. So I believe that this geopolitical tension has also weighed or kind of pressurized or kind of triggering and also pulling this market down as well. Using tech company, I always said that in any economy, any market, in all this there is a sector and industry that will trigger a bear. But this negative sentiment we're seeing is more of what investor remaining cautious and uncertain over the impact of AI sector, as also as we're seeing that software stocks are also in particular. We are also noticing deep losses in the month of February, even on concerns over high competition from AI tools. But in China, focus is more coming on two-session meeting of the country top political bodies, which are also scheduled between March 4th and March 11th. This meeting or the meeting will also establish for agenda for the Chinese 15th 5-year plan in Beijing. It's wide expected that the upline will more of stimulus measure, especially as Chinese economy grows slow steadily in the 2020s. Let's see how it will do. But stronger than expected, the US producer inflation data released on Friday also stopped concern over sticky inflation in the world biggest economy. which could also keep interest rates in the country unchanged for more time or longer. Let's put it there. But I believe that the uncertainties, coming from what is happening now, also we are seeing that from investment windows are being attractive. Also, funds are looking that. That's why you must follow where the funds are going. Let us say follow the money. Where is the money going now? Is the right time for you to know. Yes, let's look at what is happening and also in Europe. Yes, I'll tell you that in Europe, no, Europe is also not left behind with the crisis. Like I said at the beginning, global economy or market are looking now. Right now, to speak now, Europe is also in red. That zone market is also in red. And I'll tell you, even oil and defense stocks rally on Middle East conflict. But I'll tell you that the market is also not smiling and as expected as the global markets are set for volatile start for the week after US and the launch strike on Israel. But with investors rotating towards the energy and defensive stock, while airlines and consumer sector facing some pressure. Let's see how it goes because I tell you at this point you can see that there will be reduced flights everywhere, and that is why when you see oil price varying, how did it affect consumer goods? This I think that sector rotation will continue in different markets now as we speak because of what is happening in the world today. But there's major companies, major energy companies, has posted a better number like you know, PP also share and others were seeing good numbers coming there, and also they are also in green right now as we speak. Defensive stocks in that market also are looking up, climbing up. These are things that I tell you everywhere so that in any market situation, they are also where you can also play, looking at what sector will benefit from what is happening, whose sector will be a lagger or a loser in what is happening. It's good. As Monday, should as Monday has started on strong volatility and sell off in some tech company and cyclical company. The reason is not far-fetched. What is happening today is a version of investor trying to version of portfolio in what is happening right now. That's why you don't invest and go and sleep. Keep your eyes on your investment and see how you can also realign your portfolio in reality at any given time. But I see that yes, this incident is happening now to trigger a real global defensive and also oil performance will also be an attraction for many markets in terms of portfolio realignment and sector rotation as we speak now. As many analysts are looking the way of crude oil jumping, even though EPL is not even touching 80 as forecasted, 80, 90, but let's wait and see how far it will go because with what is happening now, I think everyone is looking at oil, and when oil gets to 80, 90, impact also will be on consumer goods and cost of sales and cost of production. All these are part of what this move. But I believe that the world leaders will weigh in and settle this amicably before it go beyond this level because it is the global economy that will suffer from it. US is not left behind. I'll tell you that the major nations in US as we speak are in red. After or following the launch of mass airstrike or air attacks on Iran by US and Israel. The strike push up oil prices I've said earlier, and also that's favorable to also was seen a rush out of risk assets toward safe haven assets as we speak now. Notably, gold is also looking up, even as when we're seeing that oil price is also looking up, and also uncertainties of artificial intelligence concern about technology sector. All these are what is happening right now in the market. For US stock, like I said, all the major indices are in green. I said that Dow is down by 1.5, and that of S&P is down by 1.5, and that of no, um, Nasdaq is also down by 1.9 as we speak. And this started on Saturday when the US and carry out their major or joint strike on the side across Iran. And this fear has continued after a very long, very last. Let's see how US and other leaders, and Iran got opposition on all trying to put it together and stop this and put an end to all this. Even this have triggered a lot of confusion across the globe on other strike. I tell you, from since 2022, the day you can see what started in Russia and Ukraine. So Middle East is another one again. All these have started the one economic recovery globally, while sectional or regional or different countries are trying to find their food, even when we have seen expressed a high interest because of distortion here and there. But now it's another one. But I tell you that oil price spike amidst what this Iraq conflict, and that has to say that it has separated, skyrocketed, sorry, into a way that yes, it's reflecting worries that Iraq may also move to close down um, some straight and strategic also waterways to push and also push for global supply up, and also that will also affect liquefy natural gas flow at the same time. But let's see how it goes. But right now, investors in different markets are looking at how they can navigate in this season, and that is why today, before we go into looking at what is happening in the Nigeria market, African market is also not left behind. But we're seeing most emerging markets, even Africa, we're seeing some of these markets. Some markets are down in Africa, while some are up. But I tell you that Nigeria NGX is up right now as we speak. But let's look at the topic for today that will guide us for our discussion on what to do in this market. Right now, we're seeing this market this direction, how to navigate NGX profitably amidst global geopolitical tensions and also regulatory warnings. You have seen, yes, the regulators have come up to put one caveat or not, or the other, trying to caution investors to trade with what with caution and focus on what on fundamental stance up as to speak. But before we go into looking at this topic today, what is let's say the market data or state of the market right now on the NGS is very, very important for us to look at it as we speak. NGS has rebounded from the also coming back down below the 199,000 index. It has crossed back again as we speak now. The market has traded a range of 192,790.11 to 193,978.8. I mean, market have recorded this one as we speak 870.53 basic points, representing 0.45%. You can see the market is recovering what it had lost yesterday. And if you quickly look at our chart here, you can see that there's a kind of a pullback here, but now you can see after market has formed, this is a hammer. You can see here. One is you see a recovery. But before we go further, I will call up some indicators that will help us to look at the market, even as we discuss how to navigate these global uncertainties and regulatory warnings we have seen from the regulators in the market, from association of brokers, and at the same time from NGS. Let's see how we can navigate this. Let's quickly call up some indicators that we normally use. Call up our MACD money flow and our T line. Our T line, I always tell you that it's always what it's always 8 days moving average exponential. This is the number that we're looking at. I can see that as we speak now, even when the market provide it still rest on what on the T line. But today our topic, as I said earlier, our topic this morning is also looking at what is happening in the global economy. It's very, very important that at this time we are looking at how to navigate this ongoing geopolitical tension, how it's going to affect the market, how are we taking decisions. This is very, very key for us. But your ability to understand that there should be a strategic move or a shift from being the passive investor or trader to active and an active investor or trader through what well researched portfolio management, because at this time we need to look at what the impact of this geopolitical tension on across the globe, and which sector of Nigerian market to be affected. And this is also how can you navigate this risk, and also the heightened regulatory warnings that we're seeing from the regulators. How are they going to affect the market? How are you going to also use your own strategy to navigate this? Is very, very key at this point. Knowing that yes, that you can separate the market from the economy, and also I tell you that it's government policy, either from the regulators or from government itself, as they were affecting sector, how they were having positive impact. Now we are seeing that the geopolitical tension, which sector going to benefit from it, which sector with this geopolitical tension and the art of bombing now, which sector going to favor, what is going to happen between now and the kind of peace coming back to this region again, or negotiation also resume again. These are the things investors should be looking at this time. How to navigate is very, very important. That if you understand how to trade profitably at this time, it gives you an edge over those that are just following bandwagon, or those that are just following what investing without a plan or what that objective. For you that are, you need to understand what to do right now is very, very important. As we speak now, with the global global tension shock, or we're seeing all kind of distortion, there are particular sector that will benefit from what is happening, knowing that yes, the global oil that flow for every economy in the world today is what crude oil is also, or gas is the major thing that for heating up the industrial sector, for supporting your production activities, all these data, oil cannot be wished out. That means what is happening today, and the major people involved now is what Iran, which also a major producer of oil. Why is this action going to affect? Because supply distortion is what we're going to do, and which industry will you target now? Because I say you have to know how to navigate as escalation respond with what seeing US and and Israel and Iraq serving the war example of how we are going to attack each other and all those stuff. How you also yourself going to position your portfolio is key. But right now, because our market is in sectors, yes, we are seeing generally our market is doing well. If you look at market breadth right now, I think that we're having 25 advanced out and 21 decliner. Good thing that market having market breadth. We're seeing index I've said earlier is of good thing that people are taking position, because we're seeing impressive or corporate action from big companies that are among the NGX 30. These are signs that yes, that reward system is part of what support market. As we speak now, our market is kind of trying to rebound from the pullbacks of profit taking and also portfolio alignment that we have seen in few days. In the previous week, that market also closed the week marginally down. Even the month of February, we have seen how it rally, and we see how it has delivered value for people, have created wealth. But now that we're in a new month, and this is the last month of the quarter, also I was saying, how many years in history that you see the month of January positive, March, February and March also no positive. These are some of the sessions that can come with the warning that comes from regulators, with what's happening globally. Then we're going to see then the key factor that will support price again is what is Q1 number for the year 2026. These are the things that we have to look at this point. But right now, we're considering that how can we play, how can we navigate profitably on NGS, considering what is happening globally and also the regulatory warning. But one that I should pay attention to what fundamental stand stop is very, very key. Even that with what is happening, I see that the oil and gas sector in Nigeria is a place that you and I should play, because I tell you, anywhere there is increase in price, it's about to work impact your bottom line and your top line. Now we are seeing oil price rebounding. We are not having issue here. That means if we're likely to produce as a nation, or companies in that sector to produce, but are into crude oil business, and that will likely to impact their work, their numbers positively at the end of the day. And that's why our focus on where to play right now is what majorly on the oil setup. And I'll tell you that the winners here are, because already we're seeing that crude oil has already crossed above $70. It's a sign that yes, don't forget that our budget for 2026 is about 64. Already we're already in a surplus. And if we can produce enough to take advantage of this what is happening, if you remember at the beginning of the year, even during the 2026, I mentioned that the only thing that Russia and US and Iran, I mentioned that was they can change the face of the global economy, and sector that benefit from that will be this oil sector and others. Because I tell you, if oil sector are having good money, knowing that their transaction, the banks also have more benefiting from it. I will tell you that this let's go. We're not finished today, but first we will also discuss more of it. Now the company that benefits more from this is that what the winners, let me put that way, is the upstream companies like the life of Seplat and RRL, even Owando should be. And today, I'm not surprised in Owando among the top winners. Yes, they are coming for right issue. Now, at the same time, there is a rumor of dividend expectation. If it happens, we'll see that stock rebounding to above 60 or what, even 70 on this direction. But good one that the main winners you can see that because price of crude oil have gone up, We're going to benefit from it. It's going to affect their operating profit, and also dividend capacity will expanded. For me, this also feed try to feed on it, and that is why we must pay attention to these three stocks I mentioned, Staplat and rather these are fundamental stock. That Owando, yes, it can be a more market sentiment, but because it might also join the rally, because I tell you, in any sector, when one stock is ready, people will join other stock. That was similar. Owando might join the rally, which is also, but if they come with dividend at the end of the day, even when the shareholders front is negative, there's a way they can do their financial engineering, which also can back up everything on one. But second, what in that sector too, we have to avoid, we have to be cautious or downstream players like the life of Conhol and then I have to play with caution in those ones because I tell you they will not benefit from higher price in crude oil, and also rather we are seeing a change in that in that field, in that industry, marketing industry because of crude Dangote refinery springing up, and also we had that the poor also refinery is up. What is happening like that? All these marketing companies in that national also not benefit much from it. Let's see how it goes. Another sector also that we have we expect to see that this might affect negatively is the consumer sector. Why? Because if oil price going to go and we are seeing high cost of production and also tax inflation rebounding, but tell you how long this high crude oil price will not increase also might likely also lead to what increase the cost of production, and that also increase either pump price, also diesel logistics become a problem, and this also affect companies like Nestle and Nigeria Brewery and others. But let's pay attention to see how long this will go, but it's not immediately because we are seeing stability in IFS here trying to pass the board. If we see a prolonged high cost of oil price, it has a way of affecting also how the economy also have to bow to it. These are the things that we also pay attention to at the end of the day. Yes, for the banking sector, like I mentioned earlier, banking might get benefit from it as we can have higher oil price revenue, also can strengthen the naira and also boost confidence in bank valuation. For me, it's also a good one. It's oil driven inflation return. Also, central banks also must also may post also reverse interest rate cut. But these are the things for when the reverse the bank benefit from it, while other sector will also suffer, and also it also increase risk of a bad loan if we see increase in rate. But if this move of cutting rate is sustained, we also be seeing that non-performing loan also starts coming down, and these are the things that are going to affect most of the world. In terms of regulatory warning that we're seeing and enforcement, we're seeing that the regulators are waking up to see that yes, this market will not go the way we have seen the previous years. To me, that regulation is in order to checkmate manipulation, to checkmate price directing without fundamental. These are why was yes, don't forget that any market liquidity is key, is king or key. But I believe that the NGX going ahead to penalize some companies over fall below minimum free float. It's also weapon development. It requires that yes, because of that liquidity, once there is float in the market, it provides liquidity. But when there is low liquidity, it means that yes, your profit also your are not really business because of people are good traders. How can you move? Because of the stock is not available because it's few hands. But when there's few, it encourage what more activities in the market. Like I said, liquidity is king. But stock to watch that also we are seeing some not clear position. Yes, their compliance windows are also pointing that yes, the life of prestige, that of sooner assurance, and also champion brewery. Let's watch, PDC, watch them. Let's see how far. But I believe that transparency is very important. Compliance is very key. But I tell you that companies that will not comply to rules are about to work to be hammered, and that is why you too, as a trader investor in this class, target companies and also already look at these due diligence tools. It's also to help you look at these compliance status, indicators on the NGX. When you see, CIS or like you see also MFR like a missed regulatory filing, and also all these also precaution also look at them because they have the way of flagging a red signal or positive signal for you as a trader or investor so that you will know the financial stability concern of that company. Also recently we have seen that the price manipulation that we have seen that led to the suspension of newly listed agro company that is called Vinci Agro Align. You can see that yes, when a price rally for more than almost such by almost getting to 800 or above 800, in less than 1 month, listing at 1 naira, 80 kobo, you are seeing the price gotten as high as 70 naira in 1 month. That also trigger the price, suspect of manipulation, and this is also why the stocks on suspension now. Even when they've announced 20 kobo dividend and 1-for-1 bonus, but investors are still watching to see the outcome. But I think it's a good sign that the regulators are working. But in all this, what a strategy for you to navigate this market at this time? I will tell you, like I said at the beginning, that it's a time to adopt active, player looking at strategic move in the market. Avoid passive, passive investing. Let that mindset be there so that you can look at the politics, particularly being pre-election year. You need to have to make that you manage your risk in the market, and also your portfolio is is your goal. How that can this portfolio can be multiplied? How can this portfolio can be good? The bottom line looking green. Yeah, that means you must pay attention or prepare also to regularly review and rebalance your portfolio, looking at sectors and new policies, and also looking at also economic data to help you. And also here focus on liquidity and blue chip company, because liquid is very, when a stock is liquid or marketable, or I tell you that it's also good for you. And that's why you must target blue chip companies, and that will be your priority. That yes, you are not buying just anyhow stock. For those that follow me in the last class, when I talk about expensive stock, yes, like I said you that in this phase of what is happening, if Japan has already starting production out there, that's a place that all of us should be, because it's into gold. Yet I can see today that I can see that the ETF gold, new gold is also leading in the market, because people are trying to play safe, even when we're seeing our market is in green, just to start playing safe and try to diversify your portfolio. That's why for those that have long-term opportunity, I think a place to also looking at if Japan will go into gold production and others, extraction. That's a place that we want to see the bottom line valuing, the top line valuing in the nearest future. Especially if you are taking medium and long, it's a place to start, setting out something for. Let's have it at the back of mind. Like I said, focus on liquid companies, marketable companies. Remember that you can sell easily, and also target of what on blue chip stock is very, very key. And also at this time, stock with high volume is also what you call it, because most of the stock that you see, some of a good liquid goods of liquidity is really a trap word, a trap for you in the NGX. Do that you see that these are less than 20, and you see that volume is less than 500. You have to be very careful. That's why most times they target the top NGX, that's the NGX 30. That's where it should be, because I believe that these are place to should be. And stocks to watch, discuss more that in the banking sector is a place also you can pay attention. Like I mentioned, oil sector, consumer, industrial, agro. These are sectors that you can also play defensive at this time, but understand the macroeconomic driver of the economy right now, because keep your eyes on it, because it has a also guiding you. A weaker naira, what would it cause? Will it erode foreign investor confidence? These are the things we look at. Will this the protection, kind of fuel inflation in Nigeria? These are will our foreign reserves start depleting or start rising after that we have seen it 50, 50, 50 million, 50 billion dollar. These are the things we also should look at. But volatility is one that we should prepare for at this time. But I'm not seeing the market collapsing, because our market structure have changed, and for that, let's pay attention to what is happening in the market. Volatility will be there, but I don't see collapse of NGS right now, because the market fundamental has changed, and the what we are saying, the world has improved. Profit taking is part of any market, and I pray for short term we might see that profit taking costing a small short term dip and all that support for those that have supportive oil price and positive earnings. I tell you, expect that those stock will be a new opportunity for you to start entering as to speak now, because that also boost profitability on the NGS, depending on your ability to differentiate between temporary noise in the market and fundamental shift is very, very important. Once you're able to do this, I'll tell you, you invest profitably at this point, and there's no need of you panicking. Yes, coming back to the market, like I said, if you look at the chart, you can see that the chart is already, the market trying to rebound, touching the T line. But if you look at our momentum indicator, you can see as price trying to rebound, momentum is also coming down. See, this histogram is still looking down, and money flow is now reading 50, looking down. But anything above fine, but it's looking down. The rebound is possible. The more we see positive earnings coming from these companies. But I tell you, what I'm seeing today, I'm seeing a mixed market, that even what is happening globally, African market is coming up, and Nigerian market is part of the market that's living. The trend in the world today, that market is looking up. As we speak now, market has moved also almost to 0.47, up by 930.2. Even as we speak, I can tell you that if I see that momentum is changing in the market, people are taking more position. Looking at, yes, we will survive. I've seen what happened between Russia and Ukraine all this while. Was what happened, Middle East, and we'll survive all this. But let's see how this also going to be, resolved, and then also see a change of move and a trend on also what I will tell you. As I tell you that time, you have to also know how to work to play safe. Look at those defensive stock and also stick back in your position as we go forward. Don't forget that this election here in Nigeria already election is coming closer in January. That means the only year we'll have before the election. I think the first election will be around 16th of January. That means this year, for this rest of year, once we start seeing activities, liquidity is about to come to the market because of spending. Even when we're seeing a sign of one party system in the economy, that should not stop us. That should not, but rather invest wisely and use the move of fund to play around. We're seeing rate cuts, but we're not seeing much from comment from let's watch and see if the rate cut will continue in the next MPC meeting. But I'll tell you, as we speak now, they are still liquidity in the market. Even profit taking during the market, they reported that the money flow rebound is high. That's why it's still above 50 is still having liquidity, but not run dry of liquidity in the market as we speak. On this note, I will say thank you and see you on Wednesday, hopefully by progress. Bye.